Hello dear students, myself CMA Padmaja Buzruk. I will discuss accounts of joint stock companies. Please go to study note number 1, accounting of shares and debentures. I will discuss illustrations on buyback of equity shares. Let us first revise journal entries for buyback of shares. If shares are bought back at par, then journal entry is equity share capital account debit to equity shareholders or shares bought back account. But if these shares are bought back at premium, then the journal entry is equity share capital account debit, premium on buyback account debit to equity shareholders accounts or to shares bought back account. It is necessary to adjust premium on buyback. An entry for this adjustment of premium on buyback is securities premium account debit, general reserve account debit to premium on buyback. So after passing this journal entry, premium on buyback account gets closed. If the shares are bought back out of free reserves, then amount equal to nominal value of shares so bought back is to be transferred to capital redemption reserve account. So entry for transferring this reserve is reserves account debit, profit and loss account debit to capital redemption reserve account. And on buyback of shares, the journal entry is equity shareholders account or shares bought back account debit to bank. Now we'll see illustration 22nd. Buyback at par. X Company Limited buys back its own 2 lakh equity shares of 10 each at par. Company has sufficient profits otherwise available for dividend besides general reserve. No fresh issue of shares is made for this purpose. Shares are fully paid up. Journalize the transactions. 2 lakh equity shares company has decided to buy back at rupees 10 each. So amount required is 2 lakhs into 10, which is 20 lakhs. 20 lakhs company needs for payment to shareholders. Now we'll see journal entries. First journal entry is equity share capital account debit to shareholders. This entry is to show amount due to shareholders for buying back of 2 lakh shares at 10 each at par. Equity shareholders to bank is next entry to show amount paid to shareholders for buyback of 2 lakh shares of 10 each at par. No fresh issue of shares is made. That means buyback is from free reserves and amount equal to nominal value of shares bought back to be transferred to capital redemption reserve account. You have debited equity share capital account. This is nominal value or face value of shares bought back which gets transferred to capital redemption reserve account from general reserve. General reserve account debit to capital redemption reserve account. It is given in the question that company has sufficient profits available for dividend besides general reserve and no fresh issue was made. Now we'll go to illustration 23 where shares are partly paid up. One of the condition for buyback is shares for the purpose of buyback should be fully paid. So when shares are partly paid, it is necessary to make entry for showing final call due, then pass entry showing final call received, and then only proceed for passing entries for buyback. BCG Company Limited resolved by special resolution to buy back 2 lakh of its equity shares of the face value of rupees 10 each, on which rupees 8 has been paid up. Out of 10, rupees 8 only has been paid up. That means final call of rupees 2 is due. The general reserve balance of company stood at 50 lakhs. No fresh issue of shares was made. Journalize the transactions. So when shares are partly paid, always your first entry is to show final call money due. Equity share final call account debit 4 lakhs to equity share capital 4 lakhs. Final call money due on 2 lakh equity shares at rupees 2 each. Bank account debit to equity share final call account being final call money received. So your final call account gets cancelled here. Equity share capital account debit to equity shareholders. This entry is to show amount due to shareholders for buyback of 2 lakh equity shares of 10 each at par. Equity shareholders to bank. This is amount paid to shareholders on 2 lakh equity shares at rupees 10 each at par. So equity shareholders account 1 debit and 1 credit. Net effect is equity capital account debit to bank. There is no fresh issue of shares. So nominal value, face value of shares bought back. You have debited equity capital with 20 lakhs, which is to be transferred to capital redemption reserve account out of general reserve. General reserve account debit to capital redemption reserve account 20 lakhs. This is nothing but transferring nominal value of shares bought back. Now we'll go to illustration 24. When shares are bought back at a premium. The share capital of Beta Company Limited consists of 1 lakh equity shares of 10 each and 25,000 preference shares of 100 each fully called up. Its securities premium account shows a balance of 40,000 and general reserve of rupees 7 lakhs. Company decides to buy back 20,000 equity shares at rupees 12 each. Pass necessary journal entries. Out of 1 lakh equity shares, company decided to buy back 20,000 shares at 12. Face value is 10. So company is paying 2 rupees extra to shareholders. So that means company is buying back shares at premium. Equity share capital account debit 2 lakhs. Premium on buyback account debit 40,000 to equity shareholders account 2,40,000. Amount due to shareholders for buyback of 20,000 equity shares of 10 each at a premium of rupees 2. 20,000 into 10 is equity capital and 20,000 into 2 will go to premium on buyback. Equity shareholders to bank. This is to show amount paid to equity shareholders for buyback of 20,000 equity shares of 10 each at rupees 12. So equity shareholders account gets cancelled here. Securities premium account to premium on buyback 40,000. This buyback is at premium, so you have created premium on buyback account. You have debited this account. Now it is necessary to cancel this account, and this account gets cancelled by transferring the amount from securities premium account. So securities premium account debit to premium on buyback account. And last entry is general reserve account debit to capital redemption reserve account. Nominal value of shares bought back is to be transferred to capital redemption reserve account from general reserve because there is no fresh issue of shares. Now we'll go to illustration 25 where shares are bought back at discount. PTC Company Limited has a share capital of rupees 15 lakhs comprising 1 lakh equity shares of 10 each and 50,000 8% preference shares of 10 each, both of which fully called up and paid up. Company has sufficient general reserve to its credit to enable it to comply with legal formalities connected with buyback of shares. It decides to buy back 20% of its equity share capital at rupees 9 per share. 1 lakh equity shares it has, out of that 20% it has decided to buy back at 9, face value is 10, that means it is buying back shares at discount. Record the transactions in the books of company. Equity share capital account debit 2 lakhs. 20,000 equity shares of 10 each it is buying back. To equity shareholders to capital reserve. Company is buying back these shares at discount, so equity shareholders will get only 9 rupees per share on 20,000 shares. So 20,000 is profit of the company which gets transferred to capital reserve account. Equity shareholders to bank, this entry is to be passed to show equity shareholders are paid for buying 20,000 equity shares at rupees 9 per share. So equity shareholders account gets closed at this particular journal entry. Next entry is general reserve account debit to capital redemption reserve account. Nominal value of shares bought back is to be transferred to capital redemption reserve account from general reserve. You are debiting equity share capital with 2 lakh. There is no fresh issue. So 2 lakh is to be transferred to CRR account from general reserve. In this particular video, I have discussed various illustrations on buyback of equity shares. Thank you.